What's up, guys? It's August 30th, 2024, last day in the markets, and we had some good range. The market cycle leg counting was on point today. Daily chart, 45-minute chart, breakout, multiple gaps open. Now we're going sideways. Bounced off the daily EMA, had follow through, but look at the follow through. It's not necessarily breaking out to a new high. The bulls are just getting follow through up into the range highs, which could be alarming if we're in a range bound environment, which is a lot of overlap. This could be a sell zone. Don't really trade with zones. I'm just using that so we all know what I'm talking about. Yeah, we'll have to see how price action reacts because we ended the day pretty bullish above the EMA, but we didn't quite clear new highs. Every time we came up somewhere here, sold off. Somewhere here, sold off. So it'll be cool to see what happens. The market cycle, leg counting. Let's do it. I'm trying to whisper a little bit. There's some people sleeping in my house. I'm doing this on the weekend, on Sunday. So yesterday, we had the opposite days today. Look, yesterday we rallied, sold off. Today we sold off and then rallied. What the heck? The hell? So rally, fell off. Bar gap up, bar one, good bull bar. More body than tail. Bar two, follow through. So the gap is getting follow through. That's good for the bulls. We're trading against these bear bars. If we gotta ask ourselves, we look to the left, what are we breaking out of? And we are breaking out of a lot of bars to the left. We broke out above two EMAs, but we're kind of trading right under this. So kind of sucks that we're in the middle of the range. Yesterday's range, we're in the middle of it. So that makes it a little tricky. In range bound price action, it's buy low, sell high, and we're in the middle of the range. So what do? Nothing really. I don't trade the first 30 minutes. Bar three, follow through for the bulls. Big tail on top, not the best. The bull bars are shrinking. Bar four goes down. Kind of trades one tick below. Bar two. Bar four's low is 32.25. Wait, this low is 32.25. This low is 32.50. So this traded one tick lower. Big outside bar, sells off, reverses up, trapping bulls and bears. Bears that get short are trapped here, bulls up. Well, bulls that bought bar three buy more lower and they get out break even. So this is a worse situation for the bears. Shorting after a gap up. Bar six, follow through. Bar seven, breaking out. A lot of tails on top of the bull bar, so it's not the strongest bull breakout. Bar eight, the market's going sideways. Bar nine, we see a good tail on a bull body. So leg one, pull back leg two, second leg trap within the range. More sideways price action. Look at the tails on these bars. These tails show that means there's two-sided trading. So although it's a bull breakout, there's two-sided trading. The market had its first opposite bar, so it's in a channel. Breakout, follow through, opposite bar channel, and it's a weak bull channel. What happens after a channel? We go range bound. So what I was talking about the market cycle in the beginning. Here's the range. We break out of that range. So the market cycle resets with 18. First opposite bar 19, and this leg gets followed through. The bear bars are growing, so that's good. Bar 19 can be a pullback from these two bars. Leg one, leg two. We are in leg two right here. And look at with climactic testing bar 78's low from yesterday. We're at the low of the range now. Leg one, pullback leg two. Inside bar, bull bar 27. Give me 2 seconds. I'm gonna take a sip of the coffee. My throat's a little dry. Okay, thank you. 28. Bear bar, lots of tails, trading within 25's range. Excuse me, 29 bull bar. I think it's safe to get out of shorts from here. And we start to go more sideways. Again, what's the market cycle? Breakout, channel, range. Breakout, channel, range. Here's the leg three. Doesn't leg threes can be implied in ranges. It's better to count implied legs. So it was an implied leg. Well, bar 31's tail is the leg three implied. So leg one, pull back, leg two, deep pull back, leg 3, pull back leg 4, and we're also in a range bound environment because the market is wrapping within itself. So this bull trend is a breakout, which turns into a channel, and then it turns into a range bound day because the market sold back off, targeted previous bull flag breakouts. Okay, that's beyond this. Okay, so range bound price action again, start to break out. And this structure in itself, leg 1, one more time, leg 1, pull back, leg 2, pull back, leg 3, and then we go range bound, and then we break out market cycle. Or you can count the market cycle how I was just counting it. There's so many ways to count it. You just have to be aware. Place your trades around the market structure. Don't trade what you want. Unless you only want to trade breakouts, then wait for the breakout. You know what I'm saying? But you gotta trade around market structure. It's important that you understand the market structure, because if you're buying these things, I actually did buy this and I hit out. But if you buy this, you have to understand that you're running the breakout. And when you see 16, you're not getting the breakout. Especially 18, you got to get out of longs. The market cycle is resetting for the bears. Well, for everyone, but it's a bearish breakout. Leg 1, pull back leg 2, pull back leg 3. Here's also a 2-legged pullback into the EMA. That's cool for the bulls. They got their 2 legs and it sold off. And the market was more range bound. Leg 1, pull back leg 2, pull back leg 3. Now we're range bound. Range is the end of the market cycle. A lot of overlap. Bars 38 to 44, I think, are strong enough for its own second leg. There's gaps and trap traders. And then we get a buy the close rally, last day of the month. Lots of overlap, so it's not the best buy the close rally, but it's becoming an endless pullback from this sell-off. Bears tried to sell off 53, and get trapped on 54. Excuse me, I said that wrong. Bears tried to sell off on 54. They trapped on the tails on 55. It reverses and they buy back shorts. There's another gap here. 69 is the first. I got us 1 second. 69 trend line break. So now we're in the second leg, or you could count it third leg. Leg 1, pull back leg 2. I do, when the market cycle resets, it's like breaks above the EMA to keep things consistent. That's how I like to look at it. 70, 71, 72. Bull breakout. Breaking out of this range here. Bulls want to close. They want a new high of the day. There's a gap, so bears are trapped. That went short here. 73, 74, 75. Start to pull back. 76 looks like a bull flag. It's a bull bar closing on its high, minimal tails. 77, strong bull breakout. I mean, go sideways, closing at a new high of the day. Good for the bulls. That's what we see here. The bulls aren't closing in the overall range, so it's not the best close, but it's progress. It's good. It's good. Bulls get another bar here. That's a 3-bar micro channel. 2, 3. This is 8-bar micro channel, so it should get its own second leg. Second legs don't have to be 8 bars. Second legs could come in 16 bars and be half as strong. But there's just some residual momentum. I'm going to draw these gaps in real quick. Turn off the numbers. Yeah, hope you guys are doing good and enjoying this stuff, or learning a little bit. I'm trying to just talk about the same thing again. This is how I trade. I trade the breakout. I look at the leg count and where we are in the market cycle. And just being consistent way of looking at the markets. I think over time I will be taking consistent trades. I'm trying to only trade breakouts. It's difficult. Tell me what type of setups you guys are taking. These are all gaps, and gaps mean trap traders. So like bears that I'm gonna delete that. Bears that have limit orders here. They have limit orders above this candle, on this candle's high. It's laced. The bull breakout traps them. In this situation, this gap gets retested on this candle. So the bears have a chance to get out. They short here, short more to get out. But then look at this gap. Bears have a small opportunity to get out. I think that was the candle 69. Yeah. So bears that get short at this high, they get short here and they barely get out. And if they don't, they're trapped and they have to buy back. They're shorts that causes the bull channel, whatever you call it. That's what causes breakouts. It's trap traders, trap limit order traders. Those are the gaps for today. Hope you guys are doing good. I hope you guys are marking up your own charts. If you are, let me see some. Let me know what you guys are trading. Have a good one, guys. I'll talk to you later. Bye. Hope you had a good weekend, a safe weekend. Drink some coffee.